Good morning everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin, Ethereum and XRP. I did not give you an update yesterday because it was my birthday and I wanted to reduce my workload to a minimum to enjoy the day, and I had a lovely day here in London. Oddly enough, I found a nice cosy English pub. I was finding them on every corner. It's quite amazing, they're just so lovely. Someone made a comment on the YouTube channel in the last few days that I am identifying trend changes too late. I'm guessing that they're day trading Bitcoin, and I strongly recommend if you're day trading cryptocurrencies, you should only be doing that if you are a very, very experienced day trader who has a reliable, profitable method. You should find day trading boring if you're good at it. If you're new to day trading, please do not day trade cryptocurrencies. Their incredibly high volatility means they are very high risk. You will wipe out your accounts more than once before you learn adequate risk management and develop a good strategy. If you want to learn to day trade, I would recommend the euro-dollar. It's lower volatility and it has a tendency to stick neatly into its channels. And we do have euro analysis 5 days a week on our website to assist you with trends. Let's have a look at why I see this comment is so problematic. I'm approaching Bitcoin with a really long-term outlook, and I want to show you why. If you have a long-term outlook and you buy relatively low and sell relatively high, a relatively small investment can yield huge potential profits in just a few years. So instead of trying to day trade and maybe make a living a little bit here and there and maybe wipe out your account more than once, if you buy and hold throughout volatility for several years and then you sell at an identified high when you see a complete Elliott Wave structure, you could turn $100 into millions in just a few years, and that's why I'm buying and holding. So let's have a look and see what I mean. This is the inception of Bitcoin back in 2010 on a daily chart. Back here, this was the first exponential growth curve. So you see it starts out slowly, it accelerates through its middle and it explodes at the end, and then it has a huge crash, a 76.6% reduction. This is the first time you could have identified that this market forms exponential growth curves. A market that forms exponential growth curves is a market that gives you a huge opportunity to make multi-generational wealth in just a few short years if you know what to do. I've drawn this curve along here to show you that this is exponential growth, and importantly note that this chart is also on a semi-log scale. So when you see exponential growth on a semi-log scale, that is incredibly high volatility. That is a really, really low doubling time, forming a really strong exponential growth curve. Let's have a look and see how extreme this exponential growth is. When we switch to an arithmetic scale, it's basically flatlined at the start, and then it has this huge increase and a massive explosion at the end. That is a really strong exponential growth curve. So it's really exciting to see a chart that does that, because you know that it's probably going to do it again, because Elliott Wave is fractal, and almost all bubbles in history and now form a bubble, they pop. They form a bigger bubble, they pop again, and so on. Bubbles are fractal. Elliott Wave is fractal. It puts those bubbles into context and structure. One of the problems I keep saying with cryptocurrencies is they tend to be very weak off their lows, which makes the lows really hard to identify. They tend to move up with weak volume and weak range for quite a while, and it's not until several days, weeks, or sometimes even months after the low that you can really have confidence that the next bubble is forming and the crash is not going to continue. You can see within the volume profile of the bubble, which ends up here, you can see that within this bubble it's fractal as well, and this is the middle of the third wave and this is the end of the fifth wave. So you see some decline in volume at the end, and the crash has an absolutely huge increase in volume, and then up off the low you see quite a bit of weakness. Quite a bit of weakness through here. This is a daily chart and volume bars for the daily chart. It's really not until this day, 7th of January, quite a few weeks after the low that you could really say that yes, we are now really starting to see some strong increase in volume up off the low. So the close for that session was 32 cents. If you had invested just $100 in Bitcoin on the close of the 7th of January 2011, well, you would have purchased 312.5 Bitcoin. So if you're buying and holding, let's fast forward to this selling opportunity where I had identified 6 days after this bubble formed a potential end to it. So I identified this as a complete Elliott Wave 5-wave structure. So 5 steps forward, I'm labeling cycle wave 1. Now I'm expecting 3 steps back to continue for probably a year, 1 year, 2 years, 3 years, or possibly at the time I expected Bitcoin could just crash and not form another bubble. It could go the way of tulips, which had a complete Elliott Wave structure and then a huge crash, and it never achieved those insane prices at the height of the tulip mania back in the 1600s. One of the most famous bubbles. If you had sold your investment of your 312.5 Bitcoin on the 23rd of December 2017, when my analysis expected that the bubble had popped, you would have sold at a close of $14,396.46, you would have yielded nearly $4.5 million from a $100 investment. And that's why I'm trying to focus on the big picture, on the long term. This is the market that is forming another huge bubble, and each subsequent bubble is bigger than the last one. Within the bubble, it's fractal. Elliott Wave gives that structure. So my Elliott Wave count for Bitcoin, which I cannot share with you because it is by my membership only on my website, but I'm going to be using my Elliott Wave analysis of this market to identify when I want to sell my investments that I began buying a few years ago. If you're focusing on the bigger picture, the longer term, then this was the last major buying opportunity I identified for myself, and I'd already been buying Bitcoin back in 2019, and on March 19, 2020, this was the last time I identified the end of a second wave correction. I can't give you what degree it is, again, that's by subscription, but on this date, I had an expectation that a big second wave correction was over and the next third wave within the biggest bubble was on its very, very early days. So the close of that session, $6,191.19, if you'd bought back on the 19th of March 2020, you would be holding a nice profit so far, but there's still a long way to go. Let's go and look at some technicals for today and see what Bitcoin's up to now. For a few days I've been saying that there was this consolidation with resistance about 53,000, support about 50,600. I expected an upward breakout was most likely, and that's exactly what we got yesterday, 26th of February. That's a nice birthday present for me. Yay, I like that. An upward movement, closing above resistance on an upward session with push from volume. That's what I was telling us to look out for. That's exactly what we got. And so none of us should have been surprised by that upward breakout. I did say if price broke below support at 50,600, we could see a pullback to 48,000, but on balance of probability, an upward breakout was more likely, and that's what we've got. Look out potentially for a back test of support about 53,000, but I think that's actually more likely. Price is going to continue on up now to test all-time highs, and it looks like early March, not middle or end of March, but early March is most likely to be when we're going to see new all-time highs for Bitcoin now. This consolidation was actually relatively brief, and I've been saying recently, if my analysis for Bitcoin is going to be wrong, it's going to be in expecting a pullback or a consolidation that may not come, or it may be more brief and more shallow than I expect, because there is now a strong upward pull of a huge third wave for Bitcoin. Yesterday's session has closed with a really nice increase in volume. The volume profile is so bullish. This volume for the 26th of February is stronger than the previous volume of the 8th of February. All of these upward sessions, we've exceeded it in yesterday's close. That is so good to see. This is a really good bullish volume profile for Bitcoin. At the daily time frame, ADX is again telling us there's an upward trend after a slight decline throughout that consolidation. Normal behavior for ADX. Back down here in early February, it gave us the strongest bullish signal ADX can give, and I said this is really bullish for Bitcoin. My analysis for it continues to be very bullish. There is a very long way to go before ADX reaches as extreme as it can get for this market. This is an absolutely normal look relatively early on in a bullish run for Bitcoin. RSI is again overbought, but that's not a concern for this market. This market can achieve extremely overbought conditions, can remain there for a fairly long time while price travels a considerable distance, and then it may exhibit bearish divergence or multiple bearish divergence before it has a trend change and moves into a bear market. Money flow also overbought, and again I am not going to be identifying bearish divergence between this point and this point. You need to wait for a pivot to develop on price and a corresponding pivot on RSI and or money flow before you try and identify divergence. That's a technique I've developed to screen out those times when you think there's divergence and it just disappears and doesn't turn into anything. ATR showing an increase for the 26th of February. Volume and volatility returning yesterday. Absolutely fantastic to see a really bullish breakout for Bitcoin. I'm expecting new all-time highs sooner rather than later. Now, I can't give you my Elliott Wave count for Bitcoin, but I can give you my Elliott Wave count for Ethereum, and it's really bullish. Let's take a quick step through the Ethereum wave count with all of the data from its inception back here in 2015. From this low to this high, I see a completed 5-wave impulse. Primary 1, primary 2, a double zigzag, primary 3, a really good looking impulse, primary 4, a regular contracting triangle, and primary wave 5, an impulse. The important thing to note here is that primary 5 is longer than primary wave 3. It moved in just 3 short months, whereas primary 3 lasted 5 months, and primary 5 is $195.39 greater than 2.618, the length of primary 3. That's important to note because keep your eye on the bigger picture. It is the 5th wave of an impulse which almost always exhibits the strongest movement. It will cover the greatest distance in the shortest amount of time. In other words, that's where you're going to get your profit. And within a 3rd wave, that is almost always the case for these markets. Not always in a 1st wave, but in a 3rd wave. Yep, that's what you should expect to see. And so if we have a 5-step forward pattern here, we have a 3-step back pattern here. This is the basic Elliott Wave structure. 5 steps forward, 3 steps back. 5 steps forward, 3 steps back. We should expect 5 steps forward, 3 steps back, another 5 steps forward. The bigger picture, 1, 2, 3, then will be 4 and 5. In the end of cycle wave 3, I am expecting primary 5 to end cycle 3 to be the strongest movement that Ethereum has ever seen. I expect the end of this upward movement to be a vertical rise of 2 to 5 weeks, covering the greatest distance in the shortest amount of time. This is where I expect the most profit. These numbers are just really loose ballpark figures. I'm going to wait until we've got toward the end of primary 5 and the end of primary 3 to try and give you proper targets. So if you look at the ratios I've got here on this chart within cycle 1, you'll see them repeated over here. Primary 3 here was 19.13, the length of primary 1. Intermediate 5, 7.93, the length of intermediate wave 3. If we see 19.13 for primary 3, it would reach 92.877. If we see 15.28, that's intermediate 3 to intermediate 1 here. If that ratio is seen again, we'd see 74.363. 11.09 is an extreme Fibonacci ratio, and this is a much more conservative expectation for Ethereum because its previous 3rd waves have been longer than 11.09. So if that's all we're going to see for primary 3, then 54.214 could be where it ends. These are ballpark figures. These are not targets, and I'm not using them for my own investing purposes in Ethereum, which I bought a few years ago. Within primary 3, no second wave correction may move beyond its start below 883.48. Take a screenshot and study these numbers on this chart and check them for yourself with your own data. I'm using crypto compared data. I'm not completely convinced it's always really good. Your data from your source might be a little bit different, but it's good enough, I think. Moving to the weekly, the low here of primary 2 is this point here. Primary wave 3 may only subdivide as an impulse. We've got intermediate 1, 2, 3, 4, 5 has to meet all those core Elliott Wave rules for the structure. Intermediate 3 may only subdivide as an impulse. We've got minor 1 and 2 complete, minor 3 underway. Then 4 has to unfold and remain above wave 1 price territory. 5 should move beyond the end of 3 to avoid a truncation. Same numbers for ballpark figures for intermediate wave 3. Now you'll notice that these numbers don't work with each other. The numbers I've got for primary 3 don't work for cycle 3. So like I said, ballpark figures, not targets. Draw a base channel around intermediate 1 and 2 from the start of 1 to the end of 2. Place a copy on the end of 1. When minor 3 reaches the upper edge of the base channel, that may initiate a small pullback. That may be where minor 3 ends and minor 4 begins. After the base channel is overshot with upward movement, then look out for a back test of support before moving up and away. When the upper edge of a base channel in a bull market is breached, that gives you further confidence that it's a third wave that's underway, can give you more confidence in your Elliott Wave count. Within minor 3, if I've got the degree here wrong and it's minute 1 is yet to complete and 2 is yet to arrive, 2 may not move beyond the start of 1 below 1521.78. I wouldn't expect price to get anywhere near that point. I'd expect strong support at the lower edge of the base channel, and it did provide good support for the end of minor 2. A little bit of an overshoot, that's okay. It doesn't have to work perfectly. Price quickly moved back within and is moving up and away. At the daily time frame, here's the end of minute 2 and the start of minute 3. Minuet 1, 2, 3 incomplete, 4 and 5. I've got those 11.09 Fibonacci ratio ballpark figures for minute 3 and minor 3. Again, if these numbers are wrong, they're probably going to be woefully low, because previously in Ethereum's price history, it has not exhibited a third wave, which is only 11.9 the length of its first wave. They're a lot longer than that, so I'd like to be really conservative. I've drawn a best fit channel around the start of minor wave 3 from its start on the 12th of October to these lows here on the 23rd and 25th of January, a parallel copy up on the 9th of December, and this lower edge of that channel provided support a few weeks ago, and now it provided resistance, pullback, yesterday a breakthrough. Look out for a backtest of support potentially at the upper edge of this channel before moving up and away with strength. Daily technicals for Ethereum, look out for next resistance at 3,580. I've looked for other resistance up above before this point, and I really can't see very much, so I don't think there's a lot to halt it up to 3,580, because we've had a couple of good bullish days. I expect we're probably just going to see straight on upward movement to 3,580, where we may then see some consolidation or pullback. Volume pushing price higher, but not as high as the 19th of February. 26th of February looking pretty good though. ADX is now very extreme, indicating the upward trend is very extreme, but not as extreme as it can get for this market. There's quite a long way to go actually before ADX reaches as extreme as it can get. RSI is overbought, but there's no short-term bearish divergence between peaks, and there's no pivot developed here to identify divergence today. Money flow is overbought. There was a little bit of short-term bearish divergence that was relieved by small consolidation, and money flow moved back into neutral. It's still in neutral today. Volume and volatility returning to this market. This looks like a bullish run and not a rally within a bear market. XRP, my favourite Elliott Wave count for this one, or the one I prefer because it has a great fit, expects that XRP is in the early stages of a big third wave as well. Within that, a first wave may be unfolding as a leading, probably expanding diagonal. I think the diagonal's probably expanding because I'm drawing the 2-4 trend line to sit across the low of the 26th of February, and it has not too steep a slope. So when I adjust the points for the wave ends for 3, 4 and 5 of the diagonal, it looks most likely that it should be expanding, so that's what I'll expect. If we do see another expanding diagonal for a first wave, I'll be expecting a very deep second wave to follow, and then a very long, strong, extended third wave. XRP does seem to have a tendency to form diagonal structures in its first waves, more so than many other markets. Technicals for XRP expect support at 54 cents. It's starting to move up and away, but again, it's lagging the other two. It does tend to be a bit of a laggard, and it'll catch up eventually. A cluster of 6 hammer candlestick patterns around support at 0.4875. I've been saying for a while, I do not expect to see new lows below 0.4875, and now we've got a close above resistance about 54.55 cents. I expect price to most likely continue up and away, and a couple of bullish lower wicks here. Look out for next resistance for XRP about 60 cents. 26th of February has a bit of support from volume, but not as much as previous upward sessions back to the 14th of February. Overall, there is still some decline in volume. Again, XRP does tend to be weak off its lows, and it does tend to lag the other two. This is the point on ADX for the 25th of February. We don't have the data included for the 26th of February yet. When we do, we may see a decline in ADX again, which would then indicate no clear trend. The DX lines have been whipsawing as the ADX line declines. RSI is neutral. There's such a long way to go before it reaches either overbought or oversold, and money flow is neutral. And ATR has been showing a little bit of an increase in volume, a little bit of an increase in volatility as XRP starts to move up off its lows. That does tend to lead to a bullish Elliott Wave count. That's another reason why I favour that more bullish Elliott Wave count. But it is lagging, and a diagonal structure absolutely makes sense for this laggard. That's it from me today with your update. I hope everyone's having a lovely day.